buy that for $1.
Well, you can. But here's a question. What can turn $1 million
$1 million
into just $1, just like that? Well, that's hyperinflation, my friends. I guess I should say, what turns $3.5 trillion into nothing? Well, we all know who can do that.
You know the thing.
Jack Dorsey, CEO of Twitter, tweeted out that the US is headed towards not only inflation, but hyperinflation. Now, as you can imagine, hyperinflation is much worse than your average everyday inflation. But how bad is it? To find out, you just have to take a look back into history. There are several recent examples to choose from. You have the Bolshevik Revolution in Soviet Russia in 1917. You have Hungary in 1946, Venezuela in 2016, and Zimbabwe just last year. Germany actually just announced that its inflation is as high as it's been in almost 30 years. Go look at some of these inflation numbers, especially Venezuela. It will blow your mind what their inflation has come from 2016 to now. Some factors that cause hyperinflation are rapid fire printing of fiat currency, making it rain.
Dollar bills, y'all.
Decreased production and supply coupled with increased consumer demand and lack of gold reserves, just to name a few. Sound like anything we're going through right now in the US, maybe? Well, several other people have chimed in to Dorsey's tweet, including Elon Musk, who agrees that in the short term, we may see some strong inflationary pressure. ARK Invest CEO Cathie Wood has a different point of view, stating the deflationary forces, yes, that's deflationary forces, of technology such as AI, blockchain, and robotics will help to flatten the inflationary curve for us. Now, some things that are somewhat protected against inflation are cryptocurrency, gold, and of course real estate. But why?
Why?
Because these are fixed assets. There's a finite number of them. Now, I did a show this week on inflation because in just 2 days, on Wednesday, November 3rd, the Federal Reserve is more than likely going to announce that it's going to begin tapering or reducing their level of purchasing of mortgage-backed securities. So what does this mean for us? Again, it's more than likely going to happen that the pricing on mortgage interest rates will go up. And we're already headed in that direction and have been really since mid to early September. So if you're in the market to buy a home and you're seeing prices of homes come down a little bit, this is not a time to be hanging out on the sidelines. No, these inflationary pressures erode the value of bonds, which will push mortgage interest rates higher going into 2022. So even if home prices do stabilize for the time being, the interest rates are more than likely going to go up, which means you want to act now, sooner rather than later. Now, I'd love to see your comments on this topic. How big of a deal do you think inflation will be next year? And if you know anybody who has questions on getting pre-qualified for a home loan, I would love to talk to them. I hope you guys have a great week, and I'll see you out there.